Hello everyone, Billy Abrams, CEO of ADM Securities, and myself, Alex Suslov, Head of Capital Markets at AD Mortgage, here with you today for our AD Weekly Digest.
Hello everybody, hello Alex.
Hi Billy. Last week was pretty silent with economic events, though we had some comments from Bullard on 75 basis point rate hike, which kind of sparked rates to go up. And we see today the market consensus at 350 basis point hikes throughout the year. That's what I saw from most recent comments. We are waiting for Fed's meeting next week. What do you think we'll see this week on the markets ahead of the Fed's meeting?
Well, for one thing, I've noticed that since we started doing these, we haven't come in here for a digest that yields have not been higher than they were the week before. So it's like Groundhog Day. It's always the same. This coming week we have durable goods, and advanced GDP, and we have some lesser numbers. But I think at this point it's all about the Fed, and the market seems to be. It just seems to be ignoring economic numbers or looking past them, and it's a question now as to where the Fed is headed. At the last FOMC meeting, 10 of the 12 governors were projecting 1 3/4 by year end. Board was projecting 3%. He was probably closer to right than they were. So I think this coming FOMC meeting, the important thing will be whether the statement they release and when we find out about how they all voted, where they're going to come into line. They're probably going to be more like 2.5% by year end, 2 3/4. I think the market's trying to digest all that. We'll go. This past week, the markets shot up in yield basically on Fed comments and not on news releases. And I think that'll probably be the same case next week.
And I believe aside from Fed funds rate, another matter of concern is how fast Fed will be shrinking their balance sheet, right?
That's correct as well. Of course, that hits the market. That impacts it exactly. If they're sellers of mortgages or bonds, then sure, that hits the market for sure. So I think what we're going to see, the market is probably going to be reacting now more to how the Fed governors are looking forward in terms of rate hikes and how high they'll be by year end. And of course, we are seeing a little let up in some of the things that impact inflation. Oil has not gone back up anywhere near where it was a month ago. Gasoline prices have come down a little, but the problem's still there.
Absolutely. I want to remind our audience today's conventional rates are at 5.1% and non-QM rates are at 6.9%. These days, that's where we are today. So we'll be looking forward to the next Fed's meeting and what outcome it would show to us.
Right. There were a couple weeks ago, as of a week ago, I was looking at the 2-year versus Fed funds, and it was historically wide. Matter of fact, the short end of the curve has all been so weak. I think we just recently saw the 5-year trade to 3% for the first time since 2018. But when the Fed comes in next week, if they cut 50 basis points, then suddenly the 2-year to Fed funds, instead of being at 250 beeps, will be at 200. If Bellard's right, then it'll be closer to 1.5. And what that leaves the door open for is the short end to continue to get hit. So we'll just have to see. This is going to be all about the FOMC meeting.
Aside from our non-QM updates, we have some important measures on yields that we need to look for. What are those, Billy?
Yes, back in November, December of 2018, we saw some of the highest yields in years. I think for the 5-year, it was almost 10 years. For the 10-year, maybe 5 or 6 years. And those are going to be the most striking support numbers on the chart. The 5-year's already made it to 3%. The high yield back then was 3.09. So we've gotten very close to strong support. The 10-year and 30-year are very close to 3%. And back in 2018, the 10-year reached 3.25%. And the 30-year about 340, 345. So if yields continue to spike up from here prior to that FOMC meeting, we're going to be testing strong support. And once we get past it, if the markets try to turn around, there's not a lot of resistance. The way we've come up fast may be the same way rates go back down once they start down.
Absolutely, that is very important to keep in mind.
And Alex, what do we have to look forward to in the way of webinars coming up?
As for webinars, this week we'll have a sales strategy on our non-KM product. We'll be discussing the best ways to acquire clients and borrowers that are best fit to our non-KM programs. Next week on May 3rd, we'll be talking about ease of our Jumbo program that allows borrowers with high net worth to qualify for a mortgage loan. And on May 10, we'll be talking about correspondent lending and the way brokers can transition to delegated and non-delegated correspondent partners.
Sounds like a lot of fun. Sounds like it's going to be interesting.
Yeah, absolutely. Thank you, everyone. It was Billy and Alex with AD Digest for this week.
Thank you.
Stay tuned.